Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Monday. Happy first day of the new quarter. Stoked to be here with you. Excited for what this quarter can bring. There is a lot of very interesting action that we're seeing as we wrapped up the previous quarter. And I think, look, it's really interesting as we get into the first trading day of this quarter. And when you think about who got hurt at the end of Q1, and there's a lot of expectation that some of these hotter corners of the market, whether that be the tech, semis, consumer discretionary, or really just the high tide that lifted a lot of markets, that's going to keep going. And that's where the beginning of the quarter is a very, very different animal than the end of a quarter. End of a quarter is, to a certain degree, some window dressing. End of the quarter is, to a certain degree, dumping underperforming names and piling into, or at least adding to, names that your customers want to see in their portfolios as they see what's happened in the previous 90 days. Now, if you're managing money, I'm managing my own money, right? I don't manage outside money, but my own. And I think about, all right, what do I want to start buying at the beginning of the quarter? What looks good? And is it more NASDAQ? No. It's things like, okay, where is there relative performance in financials? Where might there be relative performance in healthcare? What about basic materials? Things that would, for the most part, be considered laggards as in terms of Q1 performance. But I don't want to be buying from penthouse levels, right? I want to be buying from basement levels. And that's sort of the psychology of sector rotation. And that's a lot of what we spent some time talking about in This Week in the Market, Friday's issue. Hopefully this week, gang, I'll be able to let you know that the dashboard's been updated as we reboot This Week in the Market, as well as get those trials back so you all can get a little peek at what this content is and how it will help you as you move into whether that be the Sector Secrets Mastery Room or the Options Room or what have you. Okay, gang. So let's, as always, jump into it. And we're going to take a look at the economic calendar. And let's go jump into Forex Factory here. And you'll see that Monday, we have OPEC meetings, ISM manufacturing PMI, that's going to fall under the category of the inflation macroeconomic pillar. And we have quite a bit of data this week, even though this is a shortened week. It's an unusual week. It's a little ridiculous that non-farm payroll will actually be released this Friday. When the equities markets, the stock exchange is closed and futures have a sort of a truncated session. It just should have been moved to Friday, but we don't trade the markets we want, nor the schedule that we want. We trade the ones that we have. And we have this quirky little 8:30 non-farm payroll this Friday, which is really just frankly ridiculous considering it's a bank holiday. And so that's something that's going to be an odd reaction because we won't have a full participation on a very important number, especially a number that has had as positive an implication to earnings season as a steady jobs number for the past 6-9 months has had. All right, so that's a quick look at what's going on, what we're inheriting, sort of the mindset. And if you want more updates like this when we're not here in Charts and Coffee together, check out countdowntrader.com, gang. We have some very cool updates. We just put up an update on decoding monetary policy and a lot of interesting. Here we go. I think the second, I love this one right here. Volatility is psychology. Check that out. Countdowntrader.com. All right. So let's get to the questions, shall we? First up is, hey there, Stacy. Yes. Good luck to everyone in Q2. Good start to Q2. Hey there, editor. Can we take a look at Home Depot and Lowe's on the daily chart, looking at an entry for a long position? All right, sure. Let's jump on over here to Home Depot. Now, when you look at Home Depot, gang, ITB, XHB, good corners of the market to look at for Lowe's and Home Depot. And yes, they are in other corners of the market, but those would be two really good places to look. And as we take a look at Home Depot, let's move this 5-minute aside, open up the 60 and the daily. You know, when I look at that move higher, and we had a lot of strength on Friday. Don't fade Fridays. Frankly, don't fade any close, to be quite honest. I would look for a little bit of follow through here into probably the clearing into the early part of today's session. And then I would look to see two things on Home Depot. I'm not bullish yet. I'm not bullish yet. In fact, there's a couple things keeping me bearish. The 200 propulsion, the daily price movement range resistance. We have yet to get through the 50 level of the slow stow, which is valid because we're still in a neutral environment. Bearish momentum, by the way. So really nice Friday session, but doesn't mean that the downtrend is necessarily, well, the downtrend is never was. It was an uptrend to neutral. This is a bearish neutral market. I'd be looking still for fatigue. If you want to look long, I'd say the hourly chart is going to be the place to go. So keep a shorter term swing trade in mind, right? That's the class that we are actually wrapping up this week, the DPMR masterclass, which if you want the daily price movement ranges, the yellow and the gray zones on my charts, and you want to get all the resources and the class and everything else, you still can. And what we're looking at here is that zone for resistance. But if we can get a bullish trend, now notice Home Depot is trying to go bullish. Lowe's has not yet. So this could be a little bit of a move to the downside, but a little too soon to tell. I would say generally what happens with a strong close is a little bit of a surge. Definitely maybe the first 30 to 60 minutes of the next session. All right. Thank you for the question. Hey there, Mr. Walker. Meta and Nvidia on the 1 hour. Sure. All right. Meta and Nvidia on the 1 hour. Meta is an uptrend by the dip or the support level, the gray zone of the DPMR, and ditto Nvidia. Looking long on them both. Look for the pullbacks, DPMR and or the wave. All right. Okay. Next up, we have, let's see here. Actually, when I'm on the topic, and you got me really curious, editor. You got me really curious because I was just thinking as we were going through that. Here we go. Let me open this up here. Okay. So what I'm looking at, and I'm going to open up right now, is first ITB. Now this is where a lot of that exposure, and this will tie into XLB as well. So DHI, Pulte Homes, BLDR, there's some interesting looking moves here. And then if you take a look at the XHB, right in front of my face, there we go. This is where you're going to see, again, there's your Home Depot, there's your Lowe's. Notice that JC Controls, Home Depot, Lowe's, these are some of our more bearish corners of XHB. What's bullish? NVR, which I don't trade. Pulte Homes, BLDR, look for neutral markets, right? That might be above the 200. And then that brings us to XLB. And if you read the last issue of This Week in the Market, in that we talked about where that rotation is happening. It was the very last section of the newsletter. And if you don't have the newsletter and you want to get a feel for what it is we covered, check out the free video from Friday. I talked specifically about the kind of rotations I'm looking for in Q2. Now take a look at XLB. Not quite there yet, but there is a lot to possibly like as XLB is neutral trend and breaking above that 200 propulsion. So that's a pretty interesting look at what we've got there. All right. So let's jump back on over to the questions. Next up is, I found a new energy drink. You might remember I was drinking this stuff called Root, adaptogenic, good for your eyes, all that kind of stuff. And then I thought, maybe I'll find something with no caffeine. I'm trying this one called Update. It's pretty good. A little funky tasting, but it's pretty darn good. There's no caffeine in it, but it's got paroxetine in it. I don't know, but it is pretty nice. No jitters. Pretty good stuff. All right. So next up, but I can't call this charts and paroxetine. It just doesn't roll off the tongue. All right. Entropic. Still confused about 6J and ComDolls. How can we use them? Entropic. Yeah, it's funny you mentioned 6J. So I went into that in the newsletter. And 6J, as I described, is a carrier funding currency. So if you're looking at how to you, Mark, sorry. I skipped your question. You know what? I will definitely roll back to that. Sorry, Mark. I will definitely get to that. All right. So 6J, think about a funding currency. What does that mean? It's so inexpensive. Let me get my face out of here real quick so we can talk about all the time frames and the structure. There we go. Disappeared. All right. So whether it's intraday structure on the 5-minute, whether it's hourly structure for a short-term swing, the time frame does matter. You can check out the finviz.com Forex performance to see relative performance of the yen versus other currencies. But here's the thing. If the yen is weak, that generally does mean we have potential risk appetite because yen is borrowed or sold to fund the purchase of higher yielding assets, which is almost always stonks, right? Almost always stonks. And then if we have optimism, and like I said, the way we laid this out in the newsletter was, all right, well, what would be accompanying yen weakness? What would we ideally like to see on the other end of the spectrum? Australian dollar, New Zealand dollar, Canadian dollar. Why? Australian dollar is mining, aluminum, iron ore, gold, New Zealand, dairy, Canada, lumber, crude. What do those, well, maybe not milk so much for New Zealand, but what do those have in common? What place do commodities have in optimism? We have a higher demand for commodities when we have economic optimism. Okay, that's all there is to it. I guess my alerts are kind of loud. Let me turn the volume down there. Yeah, so that it's economic optimism. Yen weakness, ComDoll strength. All right, Mark. Sorry, I missed your question there, buddy. Great question. So the question here is, Raghee, is average true range similar to daily price movement range? You know, and not to insult average true range, but it's the same as a Beyond Burger is to a real nice sirloin hamburger. They kind of look similar on the surface, but they're made up in completely different ways, right? Average true range is sort of, well, it's the Beyond Burger, which I've had. I don't know that I would have a lot of them, but I was just so curious. So I've had one. Won't kill you. But I want a hamburger. I want a good hamburger. Now, having said that, clearly I woke up kind of hungry because I'm talking about hamburgers at 9:14 in the morning. The difference is this. Average true range is going to, well, you know what? And I get this question quite a bit since I talk about DPMRs rather, well, incessantly. Why is that? Well, first of all, it's something that I created. Okay. So maybe I'm biased, most definitely, and I've played around with average true range. I'm just going to throw average true range on the chart here. Okay. Now let's open this up. Take a look. This is really at the heart of what the difference is. Here's the length. Length could be also considered how many periods, right? Now, periods are going to be how many, whether that's a 5-minute candle, whether that's a 1-hour candle, whether that's a daily candle. How many of those candles are we looking at to determine that average true range, right? What's the range? Okay, 14 5-minute periods, just barely over an hour, right? 1 hour, it's about 2 sessions if you think about 9:30 to 4. Daily, it's 2 weeks. So that's the first thing. So every single ATR on a 5-minute, an hour, or a daily is going to give you a completely different rating. I don't see it that way. I look at historical volatility. So when I take a look at something like um, the DPMR, what are we doing with the DPMR? And so the difference is, first of all, not just how far back are we going. That would be too simple and myopic, really, right? It's more than how far back are we going, but how far back is part of this. How far back is the study looking at volatility? Does that make sense? With ATRs, we know it's usually somewhere between 7 to maybe 21 periods. Again, we notice that the 5 minutes going to be 7 5-minute candles, 35 minutes. Do I think that's necessarily a historical volatility look? For PMRs, whether that be D or H. So for HPMRs, now here's the big difference. 6 months. I'm looking at the rhythm of a market through the behavior of hour by hour over 6 months. ATR doesn't know what time it is, right? It has no understanding of time. It has no understanding of historical patterns. HPMR, since we're looking back 6 months, has an understanding of time, right? Because a 9 to 10 o'clock HPMR is going to be different than 10 to 11. All right. So what about the DPMRs? Those are also 6 months. Okay, so this is the next difference. So first of all, ATR doesn't get time. This understands time. This understands day of week. So then that next level is, we know that 9 to 10 a.m. Eastern is very different than 9 to 10 p.m. Eastern, right? And if you go back over historical data, you're going to see that difference. We know that Monday action can be very different than Tuesday than Wednesday. So PMRs consider the time of day for HPMRs and the day of the week. Now you might say, well, Rog, why do I care? Accuracy, my friends, accuracy. Accuracy and patterns. It's frankly, and it's not ATR's fault, but it's frankly impossible to see patterns when all you're looking back is 35 minutes on a 5-minute candle. When I look at the HPMRs on the on say the S&P, all right, now I'm looking back at 6 months of behavior, right? In this case, price behavior, 6 months to get these zones. Not just what's happened the last 35 minutes, but what has typically happened between 6 to 7, 7 to 8, 8 to 9 over the past 6 months. And that's where that accuracy really just becomes a completely different thing. So I apologize. It's not a short answer. It's a very big answer. I could simply say, and it would be disrespectful for me to say ATRs, frankly, aren't as good. They're not. However, why? Right? The why is what matters. They're not bad. They're just not as complete. Right? So rather than good and bad, which is sort of, not fair, they're not designed to do what PMRs are designed to do. And they measure things in a very, very different way. So I hope that makes sense. And then the last thing is, if you're looking for zones on your charts to say, you know what, Rog, where is that support level weighting? Where is that resistance level weighting? If you're looking for zones, and I don't mean 500 of them, I mean 2 zones. One is the least amount of price movement range, and the other is the average to high. It's very specific, right? So for example, as we're moving up higher, we land in this zone. That's a buy. What is it not? It's not a sell, right? And so when you use the PMRs together with the multi, now you know, can't do this because we're in an uptrend, right? So that's your entry. It's a zone. It's very specific. There's no guesswork when you combine it with which direction am I allowed to trade it in. And that's the gist of it. I hope that makes sense, gang. I get a lot of questions on this. I appreciate the I appreciate it. All right, gang. Time for me to jump into the day trading room and our Sector Secrets Mastery for our day trading the open. I will be back here, same time, same station tomorrow. I've got Friday's video on Q2 sector rotation ideas. Check that out. And also, we had our Sunday live show. We call it This Week in the Market Live. So it's going to echo a lot of what you will see discussed with a lot more detail in our weekly newsletter. All right, gang, have a great one. Be good to each other.